Hello, good morning and welcome to my morning report and analysis videos on Wednesday the 16th of August with me, Rich Perrymark, analyst at Hantec Markets. We've got a pretty decent open to the markets. Again, we're seeing this continuation of this improved risk sentiment. Again, we're seeing this continuation of the dollar rally. What we have seen in the last couple of days is the dollar rebounding. And that has sort of been helped yesterday by the strong US retail sales data that we saw, and also the strong New York Fed manufacturing data. That's being seen across these forex majors as the dollar rebounds. That improved sentiment has also come amidst the sort of reducing tensions of the North Korean situation with the US, and that is helping to drive equity markets higher as a recovery. Now let's see this US dollar, which has rebounded. It's actually made a breakout now on a near-term basis. Is that a little bit of a base pattern? Could see a rally back towards the top of that downtrend, potentially that downtrend channel, I should say. And that's coming as Treasury yields have pushed higher. Certainly helped by that US data yesterday. And the markets are now going to be looking towards the Fed minutes tonight, looking for signs of the next rate hike, signs of when the Fed will be engaging its balance sheet reduction, which is still expected to be September. But yeah, it'll be interesting to see what the Fed minutes come out with, because usually the Fed minutes that are of the meeting that doesn't have the press conference and doesn't have the staff figures or the staff projections is usually more interesting, because you get more out of it. So it will be interesting to see how that sort of pans out today. Let me just show you a chart that I continue to watch. The euro-dollar uptrend, which is intact still, but it is falling over, and it's starting to take consideration of this sort of striding out of the sort of extending of the Bund yield Treasury spread. So that's interesting today. Now, what we've got to look forward to today, quite a lot actually. UK side, we've got the unemployment data and average hourly earnings, which are average weekly earnings, which are coming out imminently. You've got Eurozone flash GDP, second reading at Q2, housing starts, oil inventories, and then the Fed. So let me just show you a few of those. We've just had out the UK data. Mild drop in unemployment, improvement in average weekly earnings. Now that will pull sterling higher, and already we're seeing that reaction on sterling. So average weekly earnings improving on both ex bonus and including bonus basis. Including bonus basis up to 2.1%. Considering inflation was lower than expected yesterday, that will certainly have an impact, and that is why we're seeing sterling reacting higher now. Later on today, we've got the building permits in line, 125, 122 on the housing starts. No change from last week. Crude oil stocks. Now, we had the API inventories yesterday, which were a bigger than expected crude drawdown and an inventory build on the gasoline, similar to what we saw last week on the EIA inventories. So will we see these numbers replicated? The oil price has rallied slightly on the back of those API, and then we're looking at the Fed minutes tonight. So let's look at my chart today, which is the dollar Swiss. Now, dollar Swiss has been in recovery mode. Look at this potential base pattern. Head and shoulders reversal, 97.70, big resistance. Tested on a few occasions in June, tested on a few occasions early August, and again we're rallying towards that point now. So is this on the brink of a recovery, a head and shoulders reverse pattern? That is interesting. That is a big resistance, 97.70. So we're rallying again. It's a bit of a consolidation move yesterday, but again we're sort of gaining the traction again to the upside. Let me just get rid of that uptrend. It got broken overnight. But certainly finding support at 97 figure, and again today 97.20 area is coming in as a support, 97.15, 97.20 as a support. So yeah, it's on these hourly chart, we're seeing a more of a turnaround once again on the momentum. More positive configuration on the RSI, finding support around the 50 area. MACD line's turning up above neutral. This is all looking increasingly likely that we're going to see a test of that 97.70 level. So watch out for that. 97.60 was the resistance from yesterday. 97.70 is the neckline. Above 97.70, resistance initially at 98.08, but it certainly would look like it would be a base pattern, and it's something to certainly watch out for if it were to be completed. Then 98.50 being the big overhead floor of that old support becomes new resistance, overhead supply, big resistance. So 97.70 initial resistance, but 98.50 big resistance there. So looking improvingly on the daily RSI as well. If that can move above 60 seriously, then that would be the highest it's been since 2017 began. So since this big sort of sell-off and dollar Swiss began. So an interesting turnaround this would be nonetheless. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.